guys, this is Mommy Beluga Investing.
Hi all, welcome again to my channel, Mommy Beluga Investing, a YouTube channel for a mother learning to invest for family future. You can also access this channel in podcast version through AnchorFM, Spotify, Google Podcasts, Apple Podcasts, and other podcast platforms. The channel is Mommy Beluga Investing. Alright, for today's video, I'm going to share or give an update of my family's investing journey and strategy as of June 2022. I do hope I can make a series of this kind of video update on our family finance and investing strategy to keep track on its growth and update. I believe it will help me and viewers here to see how my finance changed over time and to record the strategy that our family used during this period. Before I start to share, let me read the disclaimer first. Okay, disclaimer, this is an amateur video. My main intention is to record my own journey learning and investing and managing my family finance as well. This video shouldn't replace any financial advice. Every family is different. What I share here may fit to my family but may not fit to yours. Please conduct your own research before making any financial decision. Alright, now start from my family's current strategy for supposedly wealth building. We have maintained the same strategy for at least 3 years now. Okay, I'll start with sharing our family's cash flow. It starts from salary for both of us. Every month, at the beginning of the month, we set aside around 20% of our salary previously for our emergency fund. Yep, but now it's more of, we call it a cash stash probably. How much do we need to save for emergency fund? For us, at the beginning of our journey, our target was like 12 times of our monthly expenses, or equal to our annual living expense. In a later slide, we will update our cash stash, our current cash position. Then, for our cash flow, then we use the rest of our salary for our living expenses. We live a very simple life, at least for our standard. So even after setting aside 20% at the beginning of the month, we still have extra around 10 to 20% at the end of the month. Meaning that in total, we usually save around 30 to 40% of our salary every month. So that amount is to be kept in our emergency fund or cash stash. Of course, 20% of our salary goes to CPF even before they reach our bank account. Last night, I did a quick survey of our cash stash or cash update up to this month or June 2022. Our cash has grown by 9.4% from January 2022. Let's say that if you choose not to work from now, we can live out our cash stash for 4.9 years. That's a pretty good number, at least for now. It would be better if we can have more cash stash, but for now, this is good enough for us. Additionally, back in 2019, we put some amount of money in SSB or Singapore Saving Bond, which according to our calculation will be enough for our child's college expenses. Back then, the annual interest rate was around 2%. So we want to stay healthy for a long time and support our child's education later, but touch wood, we do not know the future. Our child will be 16 years old by the time the SSB can be redeemed in 2029. So that one was good. Then after that, we stopped buying SSB because the interest was below 2% afterwards. And now, as we can see on the screen, the SSB is back with 2+% interest. So from last month, we start buying SSB again in a small amount every month. This is enough to guarantee at least 2+% of yield per year. As much as possible, then we put the SSB interest back to the investment budget or our child's CPF account. The amount is minuscule, it's very small, so I doubt that our child will become a CPF millionaire, but it's better than none. So that's our, at least this is our milestone, and this is what we can do to prepare for our child's future. Now, our family CPF update as of June 2022. As mentioned in my previous video, my husband has reached his full retirement sum in 2021 or last year through a combination of no employment gap for 16 years, ordinary account to special account transfer, and annual top-up. Currently, we are paying our house in cash, not through CPF deduction. Okay, for me, my target for this year is that to reach my basic retirement sum by the end of this year. Even though that my husband and I are only 1 year apart, I started my employment pretty late, so that's why our CPF sum is very far apart. So my strategy to reach the basic retirement sum by the end of this year is that to maintain the current income, and then 8,000 cash top up to special account. Then expect some from special account interest by the end of this year, and plus 10,000 ordinary account to special account transfer. If you are unaware, the basic retirement sum for 2022 is $96,000. Okay, the idea is with 4 per annum interest, if I reach the basic retirement sum this year, my special account will be able to keep up the basic retirement sum increase every year. As we know, the basic retirement sum increased every year, and it's like a moving target. But don't worry, because every year there's a 4% per annum interest for the special account as well. So we can see in the table here that we have on screen, from 2020 to 2021, there was $2,500 increase in basic retirement sum. It means it represents 2% increase. Then from 2021 to this year, or 2022, the increase was 3,000 or 3.2%. So if the current trend continues, 4% interest in special account, the normal interest of special account, with that amount, if we reach our basic retirement sum this year, we will be able to keep up with the annual increase of BRS even without any contribution. Assuming, again, the underline is that assuming the current trend continues. Once I reach the basic retirement sum this year, my next target is actually to max my MediSave through cash top-up and transfer from ordinary account. But that one is for next year. Alright, that's our CPF update. Now let's see our investment yield. As of June 2022, no significant update from our investment from January 2022. As before, we have bank deposit, government bond, money market fund, stock, be it individual company, ETF or REIT. We slowly pull our cash from peer-to-peer lending since the yield is not as attractive as before anymore, while the risk is maintained still high. The only update is on my husband's side. He adds a little bit more into his US stock, while cryptocurrency is almost non-existent now. As before, we maintain that any dividend or interest or any yield from our investment are reinvested into the more risk area. For example, I buy more stocks with my dividend. I buy more stocks with the yield from my saving bonds, etc. We try as much as possible not to use any of the income from our investment for our consumption or living expenses. Since January 2022, our investment has grown by 1.4%. This is a combination of actively pumping cash into the stock market and the rise of the value of some of our stocks, though some of our stocks are still in red at the moment. Per June 2022, our investment yield is 2.6% so far, which is around 12.2% of our annual expense. Assuming this is only a half-year yield, we may get around 5% for our total year yield and may get to 24% of our annual expense. Yeah, this is a quite optimistic projection for us. Yeah, as we can see on the screen, we also compare our investment yield, which was around almost touching 7% in 2019 and 2020 respectively, and then went down to 3+% in 2021, and now it's 2.6% for half-year yield. So this is a full screen view of a comparison between our passive income yield versus our annual expense, the actual until June 2022. We managed to get around, as previously mentioned, we managed to get around 19, almost 20%, and then 22% of investment yield in 2019 and 2020 respectively. But then it was reduced quite drastically to around 17% in 2021. We are hopeful that our passive income yield can cover around 24% this year, since our half-year yield is 12.2%. Okay, so let's say that the trend, around 5% investment yield per year continue. How long will our investment get to cover 100% of our annual expense? Okay, let's see the projection in the next slide. With the assumption that we continuously invest at our current rate, we have constant annual expenses, no annual expense or lifestyle increase, and all our investment yield is reinvested, then constant yield of 5% per year, our investment yield will be equal to our annual expense in 2030, which is 8 more years from now. Not too bad. I'm really hopeful that this scenario will come true. Alright, just for fun, before we end up our update today. Many proponents of FIRE, or Financial Independent Retire Early movement, put 8% as annual interest rate, with the same assumption below. By 2025, which is only 3 years from now, our investment yield will be equal to our annual expense. This sounds like a very good idea, but too good to be true, because as what you can see, as we track our investment yield, 8% is way too high for the actual number. So my question is now, where can we get safe investment with 8% yield? If you know the answer, you can share in the comment section below. Alright, that was my family's investing journey and strategy as of June 2022. Follow my channel for individual stock analysis and occasional update on our finance investing journey. I have been helped immensely by other family who put their finance investing journey out there on YouTube, podcasts, and blog. So this video is my way to pay forward to the community. If you have ideas to optimize family investment, you can put in the comment section below. Sharing is caring. Please subscribe. It means a lot for a beginning YouTuber like me. You can also access this channel in podcast version through AnchorFM, Spotify, Google Podcasts, Apple Podcasts, and other podcast platforms. The channel is Mami Beluga Investing. Right, see you again on the next update, which hopefully in December 2022. Hopefully I can bring some good news. And that's all for today. Thanks for your time and see you again.